Good evening, students. So, guys, how are you? Good evening, Jyoti, Lakshmi, Kashif, Dinyash, Mohammad Abid, Alok, everybody. So, guys, day before yesterday, we were into NPS and we had also learned about drawing power. So, today we will be first of all considering what is the treatment of NPAs in case of consortium accounts. And what is the method of drawing power in case of consortium accounts? Now, first question arises, what are consortium accounts? Now, consortium means when, say, few banks join together to lend to some borrower. Okay. Say if there is A bank lends 50 crores, B bank lends 20 crores, C bank lends 10 crore, D bank lends 20 crores. Okay. So total exposure is 100 crores. So to the same borrower for the same facility, they are lending in a consortium by joining together. So in consortium, what happens? A common appraisal is made of the borrower and the loan is sanctioned, but it helps in spreading the risk. Okay, from the point of view of banks. So for 100 crore exposure, A bank takes risk of 50 crore, B bank of this much, C of this much, and D of this much. Okay, and so there is spread of risk and there is joint monitoring and supervision. So what happens if the account is what is the treatment if the borrower doesn't make regular payment? So although guys, the account is a consortium account, the concerned borrower would have to make payment in each bank. Okay, so it can't be the case that he makes the whole payment in bank A and doesn't make any payment in bank B, because in every bank the classification of NPA would be made on the basis of record of recovery uh, as is there in case of that bank. Okay, so is that clear? सो उसको मोटा मोटा ये समझिए कि हर एक बैंक में उसको अपना अकाउंट ठीक चलाना है. ये नहीं कि ए बैंक में चला दिया ठीक, ए बैंक में रेगुलर चल रहा है, बी में डिफॉल्ट है, सी में ठीक चल रहा है, डी में डिफॉल्ट है. ओके, इट कांट बी द केस, क्योंकि हर एक बैंक को अपने इंडिविजुअल बैंक के हिसाब से डिसीजन लेना है कि उसके बुक्स में क्या पोजीशन है, वेदर अकाउंट इज एनपीए और it is going to be classified as NPA or not on the basis of record of recovery in its books. Okay, clear guys? So now we will also see how DP is calculated in case of consortium accounts. How DP is calculated in case of consortium accounts. So guys, like I had given you an example of A bank, B bank, C bank. Suppose A bank is giving 50 crore, B is giving 20, C is 10 and D is giving 20. Okay. So the bank whose exposure is greater is known as lead bank. What it is known as? It is known as lead bank. So for the purpose of calculating drawing power, say if the bank is, if the borrower is obtaining credit facility from a consortium of multiple banks, so it would become very cumbersome for the borrower to to calculate DP every month and to submit the required papers every month to each bank. So he would submit stock statement to the lead bank, and the lead bank would calculate the drawing power for the whole account as a whole. Okay. And this drawing power would be apportioned in the ratio of, like in the above example, if say DP comes 100 crores, then it would be apportioned in the ratio of 50 is to 20 is to 10 is to 20. Okay. With the in respect to the credit facilities being enjoyed from the respective bank. Okay, guys. So clear? So guys, as far as NPA part is concerned, 1-2 more concepts are left. Say in case of loans against in case of loan against FDs or NSCs which are fully secured. Okay. Which are fully secured. These are instruments fully secured. Say if somebody is availing a loan of 5 against an FD of 5 lakhs, he is availing a loan of 4 lakhs. Okay, so full security is there. Bank के पास FD पड़ी है. So and the adequate margin is there also to service the interest. Okay, so these accounts are not classified as NPA. Okay, provided adequate margin is there, that would always be there to service interest. And one more thing relates to agricultural advances. So what are the NPA norms relating to agricultural advances? NPA norms relating to agricultural advances. So guys, you have to understand that for agricultural advances, the crops are classified into 2 categories. One is short term and one is long term. Okay. And what is short-term crop loan and what is long-term crop loan? What is short-term duration crops and what is long-term duration crop? Say a crop where sowing period and harvesting period is more than 1 year. Like you can say in case of sugarcane. शुगर केन सो करने में और उसको हार्वेस्ट करने में इट टेक्स मोर टाइम, सो इट इज ए लॉन्ग टर्म ड्यूरेशन क्रॉप्स. सो अदर क्रॉप्स विच आर नॉट लॉन्ग टर्म ड्यूरेशन क्रॉप्स, दीज आर कॉल्ड शॉर्ट टर्म ड्यूरेशन क्रॉप्स. ओके, so what happens in such case? Short term duration crops like wheat, paddy, which are ready for harvesting, say within short period of 3-4 months. So in such cases, there are different NPA norms for short term duration crops and long term duration crops. So what are those norms? Short term duration crops. So in case of short term duration crops, the account becomes NPA if installment, or you can say principal or interest, remains overdue for 2 crop seasons. Okay, And in case of long duration crops, the condition is that installment principal or interest remains overdue for one crop season. Okay, so these are the norms pertaining to NPA relating to agricultural advance. Okay, so Abdul, you are asking what if two banks are having same exposure in consortium? Normally, there is a lead bank. There would be a bank which has got the highest exposure because it is classified as lead bank. It is known as lead bank, and it has the greater responsibility in the consortium. Okay, now in supervision of the account also. Okay, so clear, guys. And now we come to what happens if there is erosion in the value of security. What happens if there is erosion in the value of security? So guys, we had learned about about the way account is classified into NPA. Like we have learned the NPA ladder. Like first it goes into SSA, then it goes to doubtful. Okay, and thereafter to loss. And in doubtful also we had learned D1, D2, D3. We had learned all these categories. But is there, and this is known as laddering. So first the account goes to substandard, then it goes to doubtful, then to the highest category. But is there a possibility that the NPA account directly goes to doubtful asset category, or it directly goes to loss asset category? Yes, there is a possibility that account can directly go to doubtful asset or to loss asset category. In some cases, say like if the value of security is less than 50% of the value assessed by the bank at the time of or accepted by RBI, then such NPAs may be straight away classified as doubtful assets. Or if you can say if the realizable value of security is less than 10% of the outstanding of the borrow account, then account can also be straight away classified as loss asset. Okay, so these are the few exceptions where account can be directly classified as the doubtful asset or loss assets. Otherwise, all those conditions which we had discussed earlier, like first the account goes into substandard, then D1, D2, D3, that ladder, that would be applicable. So guys, so overall, when the auditor verifies the advances, so what is his approach? What is his approach? So in carrying out audit of advances, the auditor is primarily concerned with obtaining evidence about what? Obtaining evidence about the following. That number one, that amount included in balance sheet in respect of advances which are outstanding at the date of balance sheet. So what does this mean? कि जो बैलेंस शीट में एडवांस आउट कि जो वही अमाउंट आउटस्टैंड कर रहा है बैलेंस शीट में जो कि आउटस्टैंडिंग है एज एडवांस. Okay. And advance represents amount due to the bank. That only those items are classified as advances in which bank has to receive the money back, which are the amounts due to the bank. And all the advances are backed by loan documents as applicable. Say, guys, you have to understand, when you go to a bank and apply for a loan, the bank does not simply credit the money in your account. There is a whole process of granting, of advancing you the money. There is a whole process right from the sanctioning of the advance, how the advance is sanctioned, and what are the different powers up to, like, say, a chief manager may have different power. Okay, an assistant general manager, he may have higher power. Okay, so these kind of hierarchical powers are there. Okay, and besides elaborate procedure of sanctioning of advances, then the advance has to be regularly monitored and supervised also. Operations have to be operations of the operations of the advances have to be closely monitored by the branch officials, that there is no misuse of funds. The advance, the purpose for which advance has been granted, that purpose has been met. And before the loan or advance is sanctioned by the bank to the borrower, the bank takes all legal documents. Say the borrower is mortgaging some security, then all the legal documents which are applicable, like lawyer's report, which in banking language is known as non-encumbrance report, that the property which the borrower is going to mortgage with bank is free from all type of charges and encumbrances. It means that कि उस प्रॉपर्टी पे पहले कोई दूसरा लोन नहीं है. So the lawyer, by searching the record of the local tehsil office, and he gives the report that he has made a search and the title of the property is clear and it stands in the name of the borrower or the company, whatever who is applying, and there are no charges on it, or if there are charges, what are the nature of charges, in whose name these stand. Okay, so similarly, before sanctioning a loan, the bankers also obtain valuation report of the properties from registered valuers who are on the panel of the banks. So they give a report on what is the market value of that property which is going to be mortgaged. Suppose, say, if I am applying for a cash credit loan from a bank for meeting my working capital requirements, and I am also mortgaging my residential house. So how would bank arrive at the value of the collateral security? Because the bank might be wanting a comfort level of at least the cash credit facility I am seeking, I am requesting. So the bankers obtain valuation reports. So the point I am trying to make is that this whole thing, this whole process is elaborate, is an example of elaborate internal control over the advances. Okay, so the buyers, so the bankers the head office of the bank has an elaborate laid down procedure which the different branches, which the officials of the branch have to follow while sanctioning an advance. Okay, so we have discussed some of the features of the internal control. So now we'll see what is there in your module. there are no unrecorded advances. The auditor would also want to see that there is no such amount which has not recorded in the books of account as advance, but which is in the nature of advances. Okay. And all the advances are disclosed, classified in accordance with the regulatory requirements. Prudential norms of RBI are followed. Adequate provisions have been made as per RBI norms, which we have already read. So what about internal control of advances? So like we were discussing, guys, the bank should make an advance only after satisfying itself to the credit worthiness of borrower and after obtaining sanction from appropriate authorities of the bank. Now, credit worthiness of borrower is very important thing. So, guys, before the bank sanctions you a loan, the concerned officer, he is going to make some diligent inquiries. He carries out due diligence process. You understand due diligence? It means that I would inquire about the person who is taking, who has come to my office with an application to sanction loan. That what are his references? What is his reputation in the market? Is he credit worthy person? What is his general reputation? I would make inquiries from the similar persons in the trade who might be customers, who might be my customers, as who may be my customers of the branch. Okay. So this is what we mean by credit worthiness. So credit worthiness means the borrower is credit worthy. He has the capacity to pay. He has the capacity to pay back the money. Okay. Yes, Partha Sarthi, yes, CRISIL report. These are in case of large borrowers. So, but in case of all borrowers, CIBIL score would be checked. So that is also a part of due diligence process. CIBIL score बैंक वाला देखेगा तो उसको पता चल जाएगा इसका कोई और आउटस्टैंडिंग लोन तो नहीं है. ओके, उसका पैन नंबर डाल के and 1-2 more particulars and he can verify कि इस borrower के नाम से और कोई लोन तो नहीं है, overdue तो नहीं है, और पूरी क्रेडिट हिस्ट्री वो बता देगा आपको सिबिल में जाके. ओके, CIBIL is Credit Information Bureau of India Limited. Okay, so all the necessary documents should be executed by the parties before advance are made. So whatever documents are prescribed by the head office and controlling authorities of the bank, these should be taken. These should be duly taken, signed, and on the legal papers of appropriate stamp duty. Okay, so the documentation is very, very important part. So these are all example of internal control. So once advance has been sanctioned, then compliance should be with the terms of sanction and end use of funds should be ensured. It is again the primary responsibility of the bank management. What the auditor is concerned with? Auditor is concerned with evaluating, assessing the effectiveness of internal control process. Okay. कि जब लोन सैंक्शन हुआ था, whether all the terms which were stipulated in the sanction letter, whether these have been complied with or not. Say there was a term in sanction letter that the company would bring, say 50 lakhs of additional capital by this much date. So whether that much capital has been brought in, what is the documentary evidence of that? Whether a CF certificate as was stipulated is on the record. Okay. So these types of things. So sufficient margin as specified in sanction letter should be kept. So like we had seen in cash credit accounts, normally margin of 25%. There is a condition that the borrower keep a margin of 25%. Similarly, in case of term loans, there might be a condition that borrower would bring 25% as margin as is on capital. Like I am going to purchase machinery of say 1 crores, then bank would stipulate in the sanction letter that loan is granted for 75 lakhs and 25 lakhs would be brought by me as my own capital. Okay, so that my interest is there. So what is the purpose of putting this condition of margin? That by investing, by making the borrower invest some money, his interest is also ensured. Since he has stake in the asset purchased, his interest is also ensured. Okay. So if securities are taken in the nature of shares, then the ownership of the same should be transferred in the name of the bank. So all securities requiring registration should be registered in the name of the bank, like this. So these are more 1 to 3 points. The account should be kept within the drawing power and sanction limit. So this is again part of control over advances. The branch officials, the concerned credit officer, he has to ensure that account is operating regularly. It is within limits. अगर कुछ उसमें ओवर हो गया है, there are overdrawings, या पार्टी इंस्टॉलमेंट नहीं जमा करा रही, then he has to inform the matter to the higher authorities, for which again there are internal control processes. So various statements are being generated by the system which show that which accounts are overdrawn or which are likely to slip into NPA categories because they are the conduct of the account is not proper. Okay. So all the accounts which exceed the sanction limit or drawing power or otherwise irregular should be brought to the notice of controlling authority regularly. So what is controlling authority, guys? So guys, you have to understand that in banks, all the operation portion is normally carried out at the branches. So loans are sanctioned at the loans are disbursed at the branches. These might be sanctioned by say regional office or by head office. These are disbursed at the branches. So all the regular transaction pertaining to check withdrawal, check deposits, these also happen at the level of branches. But controlling authorities, they control the whole process. They are an important factor in the internal control mechanism, internal control system which has been devised by the banks. They regularly ask for statements, regularly ask if some deviations happen. Okay, and they regularly monitor. So whether branch manager is exceeding his delegated power of sanction of advances, whether say some chief manager is having power to sanction advance of rupees 2 crore, but he has sanctioned one advance of rupees 2.5 crore. So it would be a gross violation. So these things there are laid down systems and procedures in this regard in banks. Okay, so the auditor has to evaluate all these systems, all the internal control over advances. So the operation of each advance account should be reviewed at least once a year, like to understand in Hindi कि भैया उसका खाता ठीक चल रहा है कि नहीं. ओके, सो इंस्टॉलमेंट्स टाइम से आ रही है कि नहीं, इंटरेस्ट सर्विस हो रहा है कि नहीं, उसने अपनी फाइनेंशियल स्टेटमेंट्स बैंक में टाइम से दी है कि नहीं. सो दीज सॉर्ट ऑफ थिंग्स. कोई ऑडिट ऑब्जेक्शन है तो वो रिमूव हुई है कि नहीं. So all these types of things. So guys, you understand the broad idea of the internal control over advances. Yes, students, tell me, is that clear? Yes, guys. Yes, guys, drop a mail. Is that clear? So that we can hop on to next topic. Yes, students, waiting for your mail. Yes, guys, are you able to hear me? Yes. Now you are saying clear. So guys, now we come to the, this was advances part which comes in the balance sheet. Now we will also discuss in short how audit of revenue items is undertaken in the balance sheet of bank. So revenue items mean profit and loss account items. So guys, you have to understand that balance sheet and profit and loss of a bank is prepared in accordance with third schedule to the Banking Regulation Act. To the Banking Regulation Act 1949. It is not the same as Schedule 3 to the Companies Act. So the Banking Regulation Act 1949 is the governing act. So the format of balance sheet and profit and loss is provided in the Banking Regulation Act 1949 in third schedule. Here also the schedule is third. So third schedule. Yes, Prabhat, loans and advances, both terms are used interchangeably. Okay. So this is the format of profit and loss account. So it is there in your module. So what is in the, on the income side? On the income side, there is interest earned and other income. There are two heads, interest earned and other income. And on the expenditure side, what is there? There is interest expended. So what is interest expended? It means interest paid on deposits. Okay, we had learned, guys, I had told you that interest paid on deposits is main cost of a bank and interest earned is main income of the bank. So therefore, keeping in line with that, there are two heads, interest earned, other income, and under the head expenditure, there is interest expended and operating expenses. Now in operating expenses come all type of expenses like establishment costs, including salaries, office expenses, repair and maintenance, rents, okay, all those kind of things. And there is another column of provisions and contingencies like provisions for taxation and etc. And then net profit for the year, income minus expenditure, profit, as simple as that. And then there are appropriations. Appropriation means transfer to reserves, like banks have to transfer certain amount to certain statutory reserves under the law. Under the law, this is required that so much of the profit would be transferred to reserves. Okay, so here come these appropriations and then dividend. And after that, accounting policy, notes to accounts. Okay, so this is the basically format of profit and loss account for a bank. Now we'll see what comes under the head interest earned and what comes under the head other income. So interest and all the interest income all the interest income of the bank comes under the head interest earned. Like all the advances are, the advances are the major item of the assets of the bank. So all the interest on advances would come under the head interest earned. Okay. So interest on advances, discount on bills. So when a bank discounts the bill, it charges the interest. Okay. It charges the interest in advance of the period for which the bill relates. Okay. And interest income on investment, interest on balance lying with other funds. If some funds are, say, lying with RBI, then RBI is paying interest to the bank. So all these come under the head interest earned. So what do we include under the head other income? So other income basically is a residuary head which includes items which do not relate to the core function of the bank. So what is the core function of the bank? Core function of the bank is earning interest from the lending process. So from the money which the bank has lent, the bank earns interest. So this is what we call as banking. Okay. So all other income includes like commission on LC and guarantees. So if the bank has issued a LC, then nothing in this world comes free, guys. So when you approach a bank and you ask them to issue a LC or to issue a guarantee, obviously, besides verifying whether it is possible, whether you are so credit worthy to get issued a LC from the bank or a bank guarantee, the bank would also levy some charges in accordance with their guidelines. So there is a manual of service charges available at every branch relating to levying of charges, and in CBS systems most of the things are in the auto mode also. Okay. Loan processing fees, like say when loans are sanctioned, banks are charging processing fees. Okay. Although this is related to core banking area, core banking activity, but it is classified under that other income. Why? Because it is not in the nature of interest. It is in the nature of service charges. So like say if some bank sanctions a cash credit limit of rupees 1 crore in favor of a company, then there is a schedule, say rupees 100 or 200 per lakh, the loan processing fees they have to debit at the time of sanction. Okay. Like credit card and debit card fees, or say ATM card fees. So whatever the nominal charges are there, rent from letting out lockers, locker rent, this is also a nature of other income. It is income, but it is nature of other income. Okay. So these kind of things. Profit on sale of investment, profit on sale of land, other usual heads which we know in accounting, income earned by way of dividends, miscellaneous income. Okay, clear guys? So what should be the audit approach of the auditor while auditing revenue items? Okay. So the auditor is concerned that recorded income, the income which the bank is showing in the profit and loss account, it arose from the transactions which took place during the relevant period. It is one of his main criteria. Okay, and there is no left out income. There is no unrecorded income. All the income is recorded at appropriate amount. कभी ऐसा तो नहीं है कि किसी लोन्स में मास्टर डाटा में फीडिंग करने में गलती हो रेट ऑफ इंटरेस्ट के हेड ऑफिस लेवल पे से उसमें 8% पर एनम लगाना है और 7.75 लग गया, या इंटरेस्ट रेट जब every quarter or every 6 months these might be changed depending upon the monetary conditions, so वो changes नहीं किए सिस्टम में. so अगर वो changes नहीं किए तो बैंक को तो जिस हिसाब से रेट ऑफ इंटरेस्ट लेना था तो ओवरऑल बैंक के लेवल पे तो it would run into hundreds of crores of rupees. okay, so these are the basic issues which an auditor is concerned with. Like say this we were talking about income, and what about expenditure? Say saving account पे rate बैंक कभी ज्यादा तो नहीं दे रहा. Like it can happen that normally banks pay say interest rate to some their former staff persons who are senior citizen also. They might be paying rate of interest at 0.5% plus than the normal rate in case of saving accounts to general customers. So it might so happen that in system they have fed it incorrectly, 0.5 की जगह 1% फीड कर दिया, तो उससे क्या होगा, उनको ज्यादा इंटरेस्ट हो गया, ज्यादा इंटरेस्ट मिल गया, which was not legally due. So the auditor is concerned with all these things. So point is clear to you guys. So when the auditor is auditor of a bank is verifying revenue items, his approach is number one, that in respect of income, all income which is recorded in the books of the bank that arose from transactions took place during the relevant period, and there are no unrecorded amounts. He would be obtaining comfort from that. And similarly, in case of expenditure, he would be trying to have a comfort that expenditure relate to the that expenditure arose from the transactions during the period, and it is again there is no under or over expenditure in this. Okay, it is appropriately recorded. And also RBI has advised that in respect of any income which exceeds 1% of the total income of the bank, any expenditure, any income which exceeds 1% of the total income of the bank, if income is reckoned on a gross basis, okay, should be considered on accrual. So normally, guys, banks are also following accrual system of accounting. So there is RBI direction also, if some income is reckoned on gross basis. Gross basis means that expenditure related to that income is not deducted. So then 1% of the total income of the bank, if it exceeds 1% of the total income of the bank, then it has to be compulsorily recorded on accrual basis. Or if the income is recognized on net of cost, then the limit is 1% of net profit before tax. Okay. So this you can say is an example of materiality. This you can say is an example of materiality. Okay. And if some item is not material as discussed above, then it can be recognized as and when received on the basis of receipt basis. So guys, we have understood that banks follow normally a accrual system of accounting. Interest is debited in advances account monthly. Okay. So on the presumption that there is a revenue certainty, that interest is going to be recovered, that it would not be unreasonable to expect that interest would not be collected. Okay. So as you know that in CBS system, in automated environments, the interest is applied automatically on advances accounts in case of banks. Okay. On the stipulated date at the end of the month, a command would run in the system, and the interest is applied on all the accounts all over the bank at the close of the month. Okay. Earlier, guys, 25-30 years before, when we were studying, you would be astonished to learn that banks used to apply interest on advances manually. There were manual ledgers in which each account would be maintained, and it would run in, say, 20 pages, 25 pages for the whole year, and one clerk would calculate the product, kitne din kitna balance raha, and then he would apply interest. You see how things have changed over a number of years, and there used to be mistakes. There were revenue leakages, because when the things there were revenue leakages, and there were revenue recoveries running into lakhs and crores of rupees. Okay. But now this whole process is system generated. So in such a case, what is the duty of auditor? He has to see the master data. He has to see कि जो master data में command है, whether changes have been made in it or not, and test check it. Okay, guys. So is that clear, guys? Guys, tell me, drop your mails. Yes, banks have to prepare their balance sheet under Banking Regulation Act 1949. This is the format. So guys, also you have to understand that Companies Act 2013 is also applicable to the banks, but so far as long as its provisions are not inconsistent with the Banking Regulation Act. Okay. So what is notes to accounts under accounting policy? Alok, these are the general things. भैया आप ऑडिटिंग की सारी क्लासेस पढ़ चुके हो और अभी पूछ रहे हो नोट्स टू अकाउंट्स क्या है? Notes to accounts and significant accounting policies you do not know. Revenue uncertainty. Now, when there is revenue uncertainty, means in case of NPA accounts. Now in NPA accounts, guys, I had told you that if an account turns NPA, then interest would not be debited on those accounts, because if interest is debited on those accounts, then it would be taken into the income head. So the bank in that case would be violating RBI norms on income recognition. Okay. So the idea behind whole this concept of NPA is that if the revenue collection is in doubt, then the banks should not recognize that as income. Income should be recognized only when there is certainty of its ultimate collection, when there is reasonable certainty that it is going to be recovered. Okay. And say when some account turns NPA, then all unrealized income of that account, that has to be reversed, whether it pertains to this period or previous period. any interest income or any other charges or fees which are debited in the account, but these are unrecovered. It means there is no corresponding credit pertaining to those interest items and other charges. These would have to be reversed when once an account turns non-performing asset. When once it turns into NPA, all the unrealized income should be reversed. Okay. So what does your module say? It says, in view of significant uncertainty regarding ultimate collection of income arising in respect of non-performing assets, the guidelines require that banks should not recognize income on non-performing assets until it is actually realized. Okay. So how do banks do this? So they prepare a memorandum sort of account. Okay, where a dummy account where the interest is posted. Okay, so that they know how much interest is to be taken. But this is not posted in the income account. It is not credited to the income account. So when there is realization in NPA account, then it can be taken to income account. Okay. And in case of bill purchased, students, I had told you that say in case of some export transaction, an exporter, he goes to the bank, he has exported the goods, he has got the documents in hand, he has got the copy of shipping bill and other documents, invoice and other documents which are required for discounting or purchase of bill. So what would happen? The bank can discount that bill. The bank can purchase that bill. So the bank would be charging interest on the export bill upfront. Like if I go to the bank on 25th March and I get the bill discounted, then the bank would charge interest on that bill. Say the bill tenor is of 3 months. Then in such a case, that interest income has been received in advance for say 5-6 days of current period and remaining for the next period. So obviously what has been received for the next period, it cannot go into the income account. Okay. So obviously it would be credited to other liabilities because it does not form income of that particular period. So it would violate the matching concept, as you know, in accountancy. So in case of bills purchased outstanding at the close of year, the discount received should be properly apportioned between the 2 years. Okay. So where part of receipt comprising discount charges on bill purchase related to the period beyond the year end, it should be recorded as other liabilities. Okay. So the amount which pertains to current period should only be taken into account. Yes, Abdul. If the account becomes substandard asset, even then income would be reversed. Whenever the account turns into NPA, whether it is classified as a substandard, doubtful or loss, income is to be reversed. The baseline is if it has become NPA, any category. If it has become NPA, any category, then income would be reversed. And the bills for collection. In case of bills, there, guys, sometimes it so happens that some party gives bills to bank for collection only. Here the bank does not lend money. but the bank just facilitates the process. The party gives the bills and the bank sends the bills on behalf of the party along with all other documents. Okay, so the bank here the bank collects charges. Okay, so the auditor should examine the procedure for crediting the party on whose behalf the bill has been collected. That customer account is credited only after bill has actually been collected from the either by the bank or through its agent. That customer account should be collected only when the money has been collected from the concerned party in case of bills for collection. So bill for collection is not an advance per se, because here the bank is not lending money, it collects only charges. So the auditor has to see that whatever charges are there, these are collected, and what is the procedure of crediting the money. Okay, and reversal of income. Now this is also important. If any advance including bills purchased and discounted becomes NPA at the close of any year, guys, this is very important. This forms the heart of income recognition. This hits at the fundamental aspect of prudential norms. Pertaining to income recognition. If any advance including bill purchased, any advance, be it bill purchased, be it term loan, be it CC, cash credit, if it becomes NPA, the entire interest accrued and credited to the income account in the past periods should be reversed if the same is not realized. Say अगर पिछले साल का भी कोई इंटरेस्ट पेंडिंग है, ओके, से मार्च के महीने का इंटरेस्ट पेंडिंग है और अकाउंट जो है एनपीए हो गया मई में, तो वो मार्च के महीने का भी इंटरेस्ट रिवर्स होगा. ओके, वही इंटरेस्ट रिवर्स होगा जो कि अनरियलाइज्ड है. जो इंटरेस्ट रिकवर हो चुका है स्टूडेंट्स, दैट यू शुड बी क्लियर. What the interest has been recovered, that is not going to be reversed because that has already been recovered. The bank has got the money. Only those interest, those income which are unrealized should be reversed. Okay. So this will apply to government guaranteed accounts. This we had read day before yesterday, that in central government guaranteed accounts and state government guaranteed account, both then if part interest is realized, then part amount which is not realized, that should be reversed. Dinyansh. So central state government guaranteed accounts also, if there is unrealized interest, then it has to be reversed. It has to be reversed if the account turns into NPA. Yes, Sharan Krishnan, what do you want me to explain in English? Which line, which topic? I think I have been explaining in English for considerable period of time. Which topic you want me to explain in English? So I'll repeat it. Just drop a mail, Sharan Krishnan. In respect of NPAs, all fees, etc., which has been debited in the account should also be reversed if uncollected. Like say, the banks, students debit many type of fees, like we have discussed, loan processing fees in the borrower accounts. Okay, like the bank might have got valuation of security done from a valuer. So the fees of that valuer might have been debited to the borrower account. And if that fees is uncollected, the borrower has not paid the money, or if there are no sufficient credits to recover that amount, and subsequently the account turns NPA, then that fees also has to be reversed because it has not been recovered. Okay, so not only interest, but all fees, commission, or any similar income that have accrued should cease to accrue in the current period and should be reversed. Okay, if these are unrealized. Condition is if these are unrealized, only that income. So guys, you should gain a clarity that in NPA accounts, only unrealized income is reversed. Whatever has been realized, the matter is over, the chapter is over. The money has come in the pocket of bank. But whatever is unrealized and the account has turned NPA, then it has to be reversed. Okay, so this is the whole funda, this is the whole thread which runs throughout this chapter. And similarly, in case of leased assets, also the component of finance income. So what is the interest portion? You can say in lease assets, it is known as finance income, which has accrued and credited to the income before the asset became non-performing and it remains unrealized. Again, the same thing. And it was unrealized. It should be reversed. Okay. And there is one term of takeout finance. Takeout finance means, say if some bank, some lender promises to provide at a particular date, finance at a particular date if conditions of some project are met. Okay, so the bank enters into an agreement that we will say provide you finance if you do so much things after say 2 years, 3 years. Okay, but meanwhile that person is also dealing with this other regular banking. Okay, and the account turns into NPA. Okay, then in case of takeout finance also, the account is classified as by the lending bank as NPA. It should not recognize income unless realized. So unless the income has been realized, it should not be recognized as income. Now on partial recoveries in NPA. Now a pertinent question, guys, arises is, say when the account turns into NPA, some recovery has been made. Now how would bank apportion that amount? How would bank apportion that amount? Into interest and principal. Okay, say there is an outstanding balance of 5 lakh in an account and it is an NPA account. Now the party has made some payment, say of 50,000 after the account has turned NPA. So partial recovery aa gayi, partial recovery has come. So how the bank should apportion that amount between interest and principal? Kitna interest में जाएगा, kitna principal में जाएगा? So here the guidelines state that banks are required to adopt an accounting policy and exercise the right of appropriation of recoveries in a uniform and consistent manner. Okay, So the head office of the banks, they have to devise a policy that in case of partial recoveries in NPA accounts, how these recoveries are to be appropriated, and when such a policy has been framed, the same should be followed in a uniform and consistent manner. So the auditor would like to see whether whatever the policy that has been framed by the head office of the bank, by the controlling authorities, these are being followed in letter and spirit. Okay. Memorandum account, I have already explained to you guys. Sort of dummy account in case of NPA. On an account turning NPA, banks should reverse the interest already charged and not collected by debiting P&L account and stop further application of interest. However, banks may continue to record such accrued interest in a memorandum account in their books for control purpose, because they would be wanting to know that कितना पैसा लेना है. This they want to know. Okay, so but since if the amount is debited in the normal account and it would be taken to income account, then it would be a gross violation of RBI guidelines. Therefore, it is posted in a memorandum account. And these are general things, how the interest income on investments is to be checked. Like in any other case. And now we come to expenses. Now expenditure, as we know, expenditure in case of banks is to be shown under three broad heads. Now one is interest expense, another is operating expense, and another is provisions and contingencies. Okay, so interest expense, whatever the deposits the bank is having, except current accounts, we had learned day before yesterday that the bank would pay interest on saving account and on term deposits. So this would constitute a major interest expense on the part of bank, like interest on deposits or say interest on interbank borrowings. So banks normally they borrow with each other, among each other. So if some bank is short of funds, they borrow the money from another bank for a very short period. So, and then nothing comes free. They would be paying interest on the amount borrowed. So that would come under the head interest expense. Okay. So operating expenses, payments to and provision for employees, all establishment costs, salary of staff, their provision, perks. Okay. Yes, Rama Barman Sahu, you are saying that to explain partial recoveries in NPA in Hindi. Now you want me to explain it in Hindi. Okay, I would again simplify it in Hindi also and English also. I would explain in both language. So guys, if an account has turned NPA, and after turning into NPA, some recovery is made in the account, say overdue amount was, should it take the whole amount in the interest income, or should it take in the towards the principal? Now the guidelines in this regard state that banks are required to adopt an accounting policy, and this accounting policy should be applied consistently. So साहू जी, अगर इसका मतलब ये है कि अगर एक अकाउंट एनपीए हो जाता है और उसमें कुछ पार्शियल रिकवरी आती है, पूरा अमाउंट नहीं आता, तो उसकी अपोर्शनमेंट कैसे होगी, वो बांटा कैसे जाएगा मूल में और ब्याज में। वो बांटा ऐसे जाएगा कि बैंक के हेड ऑफिस को आपकी अकाउंटिंग पॉलिसी इस बारे में बनानी है कि आप उसको कैसे बांटेंगे, और ब्रांचेस को देखना है कि वो पॉलिसी कंसिस्टेंटली फॉलो कर रहे हैं, और ऑडिटर को देखना है कि वो पॉलिसी फॉलो हो रही है या नहीं हो रही। ओके, so operating expenses are establishment costs like payments to and provision for employees, other administrative expenses like rent, taxes, lighting, printing and stationery, advertisement, depreciation on bank's property, all other expenses which are in case of a commercial concern, director's fees, auditor's fees, legal expenses, postage, telegram. So all these kind of expenses, repair, maintenance. Okay. And third main head was provisions and contingencies. Provisions like here, the provisions in respect of NPAs. So that is very important. I told you that we have to make provision of 15% in case of substandard assets, or in case of D1, D2, D3, 25, 40 and 100. And in case of loss assets also 100%. So provision for taxation, so provision for contingencies. So all these provisions would be made in this head. Okay. Now what should be the audit approach and procedures for verifying expenditures, for verifying expenditure? So guys, the auditor would be concerned whatever has been recorded in the books of the bank, in the financial statements of the bank as an expense, as an interest expense, that amount is recorded at appropriate amount. Okay. So how he can do this? He can adopt analytical procedures. Okay. He can analyze the ratio of interest paid on different type of deposits to see whether there are huge variations. He can make a comparison sort of thing, because it would not be possible for him to check each and every item. Okay. The auditor should obtain from bank an analysis of various types of deposits outstanding at end of each quarter. The auditor may work out a weighted average interest rate, कि कहीं ज्यादा डिफरेंस तो नहीं आ रहा, जैसे ऑडिटर नोज दैट ऑन सेविंग इंटरेस्ट, that saving interest is 2.5% per annum. Say for example, he assumed that there is no change of rate of interest on saving accounts. Okay, so he can calculate that what is the balance in saving account, say for the at the end of quarter, and what is the interest paid in respect of saving accounts. All these figures would be available separately from general ledger, so he can get a broad idea that there should not be abnormal variations. Okay. The auditor should also compare the average rate of interest paid on relevant deposit with the corresponding figure of the previous years to analyze material differences. Again, sort of ratio analysis. The auditor should obtain general ledger breakup for interest expenses incurred on different type of deposits. Savings pay, how much interest, term deposits pay, borrowings pay, and he should make an analysis and examine if there are any deviations. And besides this, besides carrying out this overall check, he would also test check in detail few entries. Okay, like he might test check actual interest paid on one deposit. Okay, on say in one saving account, on say on 5 term deposit accounts, so that he knows that whatever is fed in the system, it has been fed into the system appropriately, and it calculates what was required to be calculated. Okay, and for audit of operating expenses, these are all the same things which you have read in your chapter 9 on audit of financial statements. All those general considerations apply for verifying for audit of expenses like salaries, payments to employees, and other administrative expenses. And for audit of provisions and contingencies, the auditor should ensure that the compliances for various regulatory requirements for provisioning have been fulfilled. Now, the auditor would see that whatever provision was required to be made for NPAs, whether it has been made, whether provision for tax has been made properly, what is the calculation behind it. Okay, and guys, you have also to understand that as per RBI guidelines, the banks also make a very small provision, say 0.25%, for example, in case of standard assets also. So what आप कहेंगे कि why provision or standard assets? So this is a measure of extreme prudence, extreme caution कि possibility है कि standard assets में भी कहीं कोई गड़बड़ ना हो जाए, that there might be chance that some amount in standard assets may not be recovered. Okay, but this amount, the provision is to be made for very small amount. Okay, so it is just keeping in the mind the concept of prudence and extreme caution. Okay, so students, now we shall also come to the general things about the audit of banks, which we had left day before yesterday at the beginning of your module. So students, you have to understand that there are different types of banks operating in financial market. Operating in market, these are commercial banks. Number one, commercial banks, you know, the normal type of banks you see, like State Bank of India, Bank of Baroda, Canara Bank, PNB, these kind of banks, HDFC Bank. So the main purpose of these banks is to accept deposit and lend money. So they are into commercial banking. Besides that, they offer a number of products, like they have collaborations with insurance companies also, and some of them have also formed their life insurance companies. Okay, so this is known as commercial banking. Another category is regional rural banks, RRBs. So students, you might have heard the name in your respective states, like say in say J&K, there is Ilakai Dehati Bank. Say in Haryana, there is Sarv Haryana Gramin Bank. In Punjab, there is Punjab Gramin Bank. Okay, so in every state, yes, Abdul, audit report of banks, time does not permit me to show. You can go on the net and you can see. Today time does not permit me because some of your chapter is remaining and we have also to do questions. So time does not permit me. If opportunity comes, I will show you. So regional rural banks known as RRBs are the banks that cater to the needs of rural areas in different countries. Oh, sorry, in the country, not different countries, in our country. So regional rural banks are normally state specific, like say in Punjab there would be a RRB in whole state of Punjab. In Haryana there would be a RRB. In say Bihar there would be RRB. In J&K there would be RRB. So they also perform commercial banking, but they basically cater to the financial needs of rural communities. Their functioning is their operational functioning is same. Okay, so basically RRBs guys are sponsored by one public sector bank. Okay, so these are sponsored and by one public sector bank, and these cater to the needs of rural communities, to the financial needs of rural communities, by granting loans to them on easy terms. Yes, Dinyash, every state like Maharashtra, you are saying there is Maharashtra Grameen Bank. So in every state there is RRB, there is regional rural bank. You have to understand that much only. And what are cooperative banks? Cooperative banks are also like commercial banks, guys. Cooperative banks are also like commercial banks, but the difference is that their structure is on cooperative basis. They are either registered under the Cooperative Societies Act. They perform all the normal banking functions. So in Maharashtra, Dinya, you might be knowing there are many cooperative banks. Okay, and some small banks in recent times have gone bust also. Okay, due to mismanagement. So Dinyash, since you are Maharashtra, you must be knowing about that. So they also cater to the needs of rural and agriculture sectors. So what is the difference between RRB and the cooperative banks? Cooperative banks are set up on cooperative principles and registered under Cooperative Societies Act. Okay, and some new kids on block have come, guys, in recent years. These are payment banks and small banks. Payment banks and small finance banks. You might have heard the name of Airtel Payment Bank, India Post Bank, okay, Paytm Payment Bank. So these banks, they cannot lend money. What is the distinguishing feature? They cannot lend money. And since they cannot lend money, they can accept only restricted deposit. People can open saving account, current account in these banks, but up to a certain amount. The balance cannot go beyond a certain amount. Okay, so the present limit I think is rupees 2 lakhs. So the purpose of these banks is just to avail to inculcate a banking habit in the people, so that they can make their small payments from their saving and current accounts. Okay, they can have issued ATM, debit cards, etc., and they can make their small payments from these accounts. So these banks are known as payment banks. Payment banks. And another is small finance banks. Small finance banks, as the name suggests, like these are AU Small Finance Bank, Equitea Small Finance Bank. You might have seen their boards in Mumbai or in Delhi, in big cities, or in smaller cities also, in official towns also. These are all there. So their purpose is to help finance small and unorganized sector like micro business, very small, tiny units. Okay, might be needing loan of 10 lakhs, 50 lakhs, these sort of things. And development banks. Yes, Prabhat, these are all things are subject to RBI guidelines. RBI के guidelines के बिना कोई banking sector में RBI is regulator and all the guidelines are the banks have to follow. So what we are learning is just general, is very general to have an overview कि भाई ये भी है, आपको इतना ही अंडरस्टैंड करना है, ये भी है और उसका ये मतलब है. We are not going into detailing. And what are development banks? Development banks are which provide finance for infrastructural needs like SIDB, Small Industrial Development Bank, Industrial Development Bank, and Industrial Finance Corporation of India. So these are all development banks which provide long-term finance for economic growth of the country, for building say ports or these type of things, development banks. So functions of bank we have already discussed: accepting deposits and granting advances. And as you know, RBI is the regulator body, is a regulating body. It is responsible for the supervision of the banking system. That is very important function. It determines the monetary and credit policies, keeping in view in conjunction with the central government. So guys, you might be reading in newspapers कि monetary policy committee की meeting हुई quarterly. Have you read? There is a quarterly meeting of yes, all banks in India are subject to RBI supervision, whether these are foreign banks or private banks, because these are all commercial banks. These are all commercial banks regulating the activities of commercial and other banks. Okay, so all banks have to follow the RBI norms, RBI guidelines. Okay, and RBI has supervisory power over the banks functioning in the country. They can undertake inspection. So RBI functions. RBI functions, you already know, guys. RBI is the responsible for issuance of currency. Okay, for how currency is to be issued, how much is to be issued. Okay, it acts as banker to the central and state governments. पैसा चाहिए सेंट्रल गवर्नमेंट एंड स्टेट गवर्नमेंट को. ओके, and they maintain accounts with RBI. It acts as banker to central and state governments, and it also provides finance borrowings to other commercial banks also. And banking operations conducted only at branches. This I have already told you, that all the banking operations are conducted at the branches. So all the controlling authorities, these control and supervise whatever the system procedures have been laid. Okay, so there is head office of the bank, and then there are say zonal offices, and then regional offices, so and then branches. Okay. So in a region, there would be a certain number of branches. The branches would be reporting to region, region would be reporting to zone, and zone would be say reporting to head office, or there can be any other type of structure. So the point is, you have to understand that this is how the banking system operates. कभी आप कहते हो, आप जाते हो कि सर मेरा 1 करोड़ का लोन सेक्शन कर दो, तो ब्रांच मैनेजर कहता है ये मेरी पावर में नहीं है, दिस इज नॉट इन माय पावर. द प्रपोजल, मेरी पावर 50 लाख है, द प्रपोजल विल गो टू माय रीजनल ऑफिस. Okay, because he does not have power to sanction the loans beyond such amount. रूटीन की जो ट्रांजैक्शन है और रूटीन ट्रांजैक्शन कैश डिपॉजिट कैश विड्रॉल से issuance of LC, issuance of guarantee, check deposit, check withdrawal, account maintenance, these all take place at the branches. So the branches are the public face, are the dealing face of the banks, and behind are sitting controlling authorities at the regional office level and at the head office level, at the back end office level. Okay, so the branches is what you see are the face of the bank to the public, but behind those branches there is an elaborate system. So you understand, guys? And the regulatory framework, guys. So since banks deal with money, banks deal with finance, so when anything we deal with finance, then its regulation becomes very important, and a host of laws are applicable to banks, and some names of some of these laws are written in your module. So you have to understand that Banking Regulation Act 1949, this is the main governing act of banks. The financial statements are prepared in accordance with third schedule to the Banking Regulation Act 1949. Okay, and there are also Regional Rural Bank Act RRBs, which is for RRBs, Money Prevention of Money Laundering Act, and day before yesterday, we were reading about SARFAESI, Securitization and Reconstruction of Financial Assets and Enforcement of Securities Interest Act. It lays down a mechanism that when an account turns bad, then how the procedure to be followed, how the property mortgage to the bank is to be auctioned, what is the legal procedure. Okay, so Banking Companies Acquisition and Transfer of Undertaking Act 1970 and 1980, this act pertains to the era when the nationalization of banks took place. Okay, and the banks came under the control of the government. And one more thing, guys, you have to understand that what is the peculiarities involved in banking from the point of view of an auditor. Banking is also an industry. But what are the special considerations which have to be kept in mind by an auditor? And what are the peculiarities of the banking business which drives an auditor towards for making his approach towards the audit of bank different from other commercial entities? Number one, it is the huge volumes and complexity of transactions. So guys, you have to understand that huge transactions are taking place in all branches of banks every day. So even in a medium-sized branch, you would see that in every day there are at least say 1,500 vouchers. 1,500 vouchers on daily basis, which might pertain to cash, which might pertain to checks, clearing, or expenses of banks or other transactions. So there is a huge volume, and complexity of transaction is also there because the banks have to comply with large volume of comply with a number of acts, and legal requirements have to be met with, and transactions to be undertaken are complex. These are taking place in real time. Okay, wide geographical spread of banks network. So there is like a nationalized banks, they may be having hundreds or thousands of branches all over the country. So So look how large that organization is, like say State Bank of India or Punjab National Bank. These are big banks. These are all having branches all over the country. Okay, in metros, in urban areas, in rural areas, you would find a SBI. Okay, large range of products and services offered. So there are many products. There are different type of loans offered. There are different type of term loans. There are car loans. There are machinery term loans. There are term loans for building. There are housing loans. There are staff loans. Okay, there are, and many type of services are offered. Okay, so like the bank is offering, say, RTGS facility, and say a bank is offering for its borrowers, it is issuing letters of guarantee. So all these type of things. Extensive use of technology. So nowadays banks rely on extensive use of technology. So they work on basis of CBS solution, CBS system. CBS means core banking. CBS relates to core banking. So the core banking solution, core banking system, the transactions take place in real time. So you are in Mumbai, you can withdraw from your account maintained in Delhi. Okay, you use ATM card in your Mumbai, but your account is real account is in Delhi. Okay, so extensive use of technology. So when technology is there, it is liable to misuse also. So strict vigilance by banking regulators. So who is the regulator in banking industry? That is RBI. So the banks have to follow the guidelines, the requirements of RBI. So clear, guys? Is that clear? Yes, guys. Now, type of bank audit reports. Students, you have to understand that when we talk about nationalized banks, public sector banks like SBI, Canara Bank, Bank of Baroda, these are all nationalized banks. Government has taken these banks. Okay. So how the audit of these banks take place? Now there are auditors at the head office level who are known as statutory central auditors. Okay, so for one bank, there would be say 4, 5 or 6 number of statutory central auditors. Okay, so they would be dividing their work depending upon say geographical area or functions. That one audit firm would look after advances of the bank as a whole, one would look after deposits, one would look after other areas, or it could be about geographical, that one audit firm would look in the whole operations of northern region, one audit firm would look the whole operations of the western region. Okay, so because guys, you have to understand that first of all the financial statements at branches are prepared. In case of nationalized banks, first of all financial statements at the branches are prepared, and then consolidation takes place at regional office level. Okay, the number of branches which fall in the regional office, consolidation takes place there, and then it further moves up. So then final balance sheet at HO level is prepared. So in case of nationalized banks, the branches are audited separately by statutory branch auditors. Okay, so every audit firm, they would be allotted branches, 2-3 branches. So CA firms, the audit firms, they have to apply. So there is a laid down procedure in this regard. So a panel is prepared and it is sent to the head office of the banks, after taking approval from RBI. So the bank statutory central auditors. So who are the statutory central auditors? Statutory central auditors are appointed at the HO level, at the head office level. They are responsible for expressing opinion on the financial statements, for conducting audit of the bank as a whole. Okay, and statutory branch auditors, they are responsible for they are responsible for statutory branch auditors are responsible for audit of branches. Okay, so there are certain reports which the statutory central auditors have to give, like the main audit report they would be issuing. Besides, they also issue a long form audit report. So it is a report which contains many questions pertaining to different areas of functioning of bank, like um, like deposits, like advances, like housekeeping operations. So long form audit report is also given by statutory branch auditors, and thereafter the consolidation takes place at HO level, keeping in view what the comments of statutory branch auditors are there. Report on compliance with SLR requirements. SLR, guys, you understand? So guys, uh, these lines, these topics are there in your module just for reference. You have just to अंडरस्टैंड कि ये होता है, ये ज्यादा डिटेल में आपके सिलेबस में इसमें से कुछ नहीं है, और इन रिपोर्ट्स में क्या क्या होता है, व्हाट इज देयर इन रिपोर्ट्स, these are not, this is not part of your syllabus. Okay, so SLR is statutory liquidity ratio. So guys, you have to understand that banks have to maintain SLR. They have to invest a portion of their. No, Muhammad, you are asking after qualifying CA inter we will be statutory central auditors. No, who told you? Abhi to, guys, you would not after qualifying CA inter you would be nothing. You would have no degree. You cannot use the word CA. आपको किसने गलत फहमी में डाल दिया, मोहम्मद? No, this is not right. This is not right. You would be, you can use the word CA only when you have qualified your CA final exam and you have enrolled yourself as member of the Institute of Chartered Accountants of India. नहीं तो ये this is a fraud. Okay. And report on whether income recognition, asset classification, provisioning as per RBI guidelines has been made. Okay, there are a host of certificates to be given and reports to be given by bank. You can give a passing reference to these terms. Okay, so after that we shall once go through the overall approach of the auditor towards a bank audit and some other related matters, and we shall also be doing some questions. So we'll take a short break of 5-7 minutes, guys. So a break of 7 minutes. Yes. Yes, guys. So you have to remember that Section 30 of Banking Regulation Act, it requires that balance sheet and profit and loss account of a banking company should be audited by a person duly qualified under any law for time being in force to be an auditor of companies. So what does this mean? This means that a person who is qualified to be appointed as auditor of company, he is also qualified to be appointed as auditor of a bank. Okay. Pratika, you are saying in case of NPAs guaranteed by central government, no provisioning is required. Yes, because in case of central government guaranteed accounts, if the guarantee has not been repudiated, guarantee still continues, then the account would be classified as standard asset. However, for income recognition purpose, for income recognition, the account would be treated as NPA for limited purpose of income recognition. It means that in case of central government guaranteed accounts, if some account turns NPA, then although it would be classified as standard asset, but any unrealized income in this account would be reversed, like in case of NPA. So this is also a sort of exception. Okay. No, Muhammad Aslam, after CA Inter, you would not be an auditor. You would not be anything. You would only be a semi-skilled accountant, nothing more. Because you will not have any official qualification. You would not be you will not be member of Institute of Chartered Accountants of India. Only those persons who have qualified CA final exams, only they can apply as for enrollment as members of ICI, and a person who is member of ICI, only he can be appointed as an auditor. Okay. And who holds certificate of practice. So the appointment of auditor, all eligibility, qualification, disqualifications as are applicable in case of Companies Act, Section 141, you have already read in chapter 10. These are applicable here. So appointment of auditor, the auditor of a banking company is appointed by the shareholders at AGM. And however, in case of a nationalized banks, all PSU banks, SBI, Bank of Baroda, these types, here it is appointed by bank concerned acting through board of directors. So in case of say, and in both the cases, prior approval of RBI is mandatory. So this is an additional condition. So that is why I told you that when panel of statutory branch auditors is statutory branch auditors for bank is prepared, then it goes to RBI for approval. Only when the panel is vetted by RBI, only then auditor can be appointed. So this is the important point in case of appointment of auditor of a bank. In case of nationalized banks, the auditor is appointed by bank acting through its board of directors. In case of other banking companies, say private bank, the auditor is appointed by shareholders in AGM as in case of any other company. But in both cases, the approval of RBI is mandatory. Okay. Yes, Dinyash, that is true. Not only audit of banks, any person who can be appointed as an auditor, he must hold valid certificate of practice. First thing is that you should qualify CA final. Then you have to apply as member of ICI. And for having the ability to sign, to certify the financial statements, to perform audit function, to perform audit and attest functions, to to audit, you have to hold a certificate of practice. You cannot issue a certificate. You cannot issue any report unless you hold a certificate of practice. So all persons who qualify their CA, and if they intend to come into the practice, they apply for membership of ICI and also apply for certificate of practice, CP. That is a mandatory requirement. No, bank account. Having bank account in the same bank does not disqualify an auditor. However, being indebted, having taken a loan as laid down in Companies Act, then he would become disqualified. Merely having a saving account or a term deposit account does not disqualify. Mohammed CA can be appointed as statutory central auditor as well as statutory branch auditor. Branch audit is conducted by branch auditors. Okay, and statutory and audit of the banks as a whole at actual level for the financial statements as a whole, it is conducted by statutory central auditors. So there are two different panels. For statutory central auditors, there is a different panel. For statutory branch auditors, there is a different panel. Now, this question, 1 year articleship, new scheme, this I don't have any knowledge. Alok Shivlani. So similarly, the auditors of RRBs are also appointed by the bank concerned with the approval of central government. Remuneration of auditor is fixed by RBI. So there is fixed scale of remuneration of RBI in consultation with central government. Okay. Because central government is a stakeholder in case of all nationalized banks. So powers of auditor. So all the powers which you have read in Companies Act, students, regarding the access to books of accounts, power to call, power to obtain information and explanations, all these things, access to books, documents, vouchers, all the powers are available with the auditor as in case of any other audit. No, he cannot do, Abdul. He cannot do. The condition applies to bank as a whole. He should not have taken the loan from the bank. Now, Sharan Krishnan, you are asking me to again explain second point in the bank appointment. In case of Sharan, you have to understand that in case there are two types of banks. The banks may be private banks like say HDFC, or there might be nationalized banks, PSU banks like SBI, PNB. So in case of nationalized banks, the appointment of auditor is made by bank acting through its board of directors. RBI permission is mandatory. But before the auditors are appointed by board of directors, the RBI permission is mandatory. Similarly, in case of a banking company, the auditor is appointed by shareholders at AGM, like in case of any other company. But again, the permission of RBI is required before appointment is made. Okay, so the report which the auditor gives in case of bank is apart from all the matters which are required to be stated in accordance with the respective banking law like Banking Regulation Act, all these items like in Companies Act, these have to be considered. And besides that, He has to report whether, in his opinion, financial statements present say true and fair view of affairs of bank. Okay. Whether or not transactions of the bank which have come to his notice have been powers of the bank. Whether or not returns received from the branches of the bank have been adequate. So the banking system operates on the basis of controlling offices and branches. So whatever the returns have been received from branches, have the auditors found them useful for the adequate for the purpose of audit or any other matters? So here also format of the report is in line like that you have read in your audit report chapter and also in Companies Act, and besides the above matter which we have discussed. And guys, you have also to understand that CARO 2020 does not apply to banks. You have read CARO 2020 and you know that in the first point in chapter 10 relates to the applicability of CARO. So it is clear there that CARO does not apply to the banks and insurance companies also. Okay, guys, a few years ago, I think 1-2 years back, there was question in CA final exam that regarding that this whether CARO is applicable to the audit of banks. A practical type of problem was there, and it was a 2-mark question, I think. So sometimes students, when you read the whole syllabus, read the whole course, many things would go out of your head. आपको सारी बातें याद थोड़ा रहेंगी, लेकिन जो आपको मेन चीज है, जिनका फोकस है, वो आपको कभी नहीं भूलनी. ओके, that is why guys, I am always stressing, highlighting important points. The points which are important, I am laying more stress on those points. Okay. And long form audit report, I have already told you, LFAR. First, these are, it contains many questions regarding, say, deposits, regarding advances. Okay. It asks the auditor whether branch is doing these things, whether these records are maintained, whether operations are being reviewed regularly or not. It runs into, I think, 10-15 pages or even more than that. So the auditor has to give response to each of the questions, and on the basis of LFR of the branches, the statutory central auditors give their long form audit report for the bank as a whole. Okay, you have to understand that much. Besides, there are certain RBI reporting responsibilities and responsibility of reporting of fraud, which you no, Sharan, CARO is not applicable to bank. You are writing CARO is applicable to bank. CARO is not applicable to banks. Now, if your question is why it is not so, because law has chosen to be so. Law has required that CARO is not applicable because of the peculiar nature of operations of the bank. Okay, because all the questions asked in CARO relate to many other things relevant to Companies Act and banks. Although Companies Act is also applicable, but the banks operate in the larger framework of Banking Regulation Act 1949, and special considerations apply. Therefore, lawmakers have thought it prudent not to make CARO applicable, CARO 2020 applicable to banks. Hope, Sharan Krishnan, it is clear to you. And audit, all fraud, what is the duty to report on fraud? Whatever you have read in your chapter on frauds under Companies Act, the same duty is there under section 143, subsection 12 and rule 13. I think I was having an opportunity to interact with you on chapter 5. So we had learned that any fraud in uh, amount involving rupees 1 crore or more is required to be reported to central government. And okay, so all those requirements, same requirements, these are to follow. And what should be the approach of auditor? Generally, this is all the general things, whatever you have studied till now. Okay. So one more important thing, guys, we are left in the NPAs that I would like to explain to you. So guys, you have to understand that before an account becomes NPA, there is an internal mechanism in the bank, internal control mechanism in the bank to mark these accounts as special mention accounts. So it is a new term, special mention accounts. So what are these special mention accounts? आप कहेंगे अब ये special mention account, some new thing has come. You have to understand it this way, that before an account is classified as NPA, before it becomes non-performing, before it peaks with the RBI guidelines which are there for classifying an account as NPA, internally for its purpose, as a control measure, the bank classifies this account as a special mention account. So these are the accounts which show some stress signal. Say if I am having a car loan, okay, and if I do not pay installments on times for a month, okay, then my account would be showing some stress signals. The branch manager, the bank management, they would be knowing if they are reviewing those statements, if they are reviewing the system generated reports, they would be knowing that the party has not paid, that Mr. Vail has not paid the installment on time for a month. So he might be having some difficulty. So it means that the account is showing some stress signal, like say in case of CC account, if the CC limit is for rupees 10 lakhs or say 50 lakhs, and the account in a month is overdrawn for 3-4 days, the balance goes up to 53 lakhs, then it again comes down to 50 lakhs. But the party, it seems that party is regularly needing more funds. So this is an example of some stress signals in the account. So these accounts are known as special mention accounts. So special mention accounts are further classified as SMA 0, SMA 1 and SMA 2. SMA 0 mean account showing some stress signal, जैसे कुछ ओवर ड्रॉइंग्स है कुछ दिन के लिए बट ठीक हो गई. ओके, इंटरेस्ट हर बार ड्यू डेट से 10 दिन बाद पे करता हूं मैं. कार लोन पे जो ड्यू डेट है, से ड्यू डेट इज 15th April, so I pay interest on 30th April. Why I should have paid on 15th April? So my account is showing some stress signal, and SMA 1 is overdue between 31 and 60 days. Where overdue, say I do not pay installment for more than 30 days, okay, but it is less than 60 days, so it is SMA 1, and between 61 to 90 days it is SMA 2, and after SMA 2, the moment it crosses 90 days, what it would become, guys? It would become NPA. So special mention account clear to you guys? What is the meaning of special mention account? What do we mean by special mention accounts? Special mention accounts are those accounts which have not turned into NPAs, but they show stress signals. They might slip into NPA. there is a likelihood of their slipping into NPA if corrective action is not taken. If the party does not, if the borrower does not pay up, or if borrower does not maintain financial discipline in time. Is that clear to you guys? Tell me. SMA, Anuradha, Karmakar, I have explained at large. SMA accounts are not NPA. These you can understand. These are a type of pre-NPA. Okay. Before, these are meant for the internal control purpose of the bank. Okay. That so that if some account is showing some stress signal, the bank management knows that the account is showing stress signal, so that they can talk to the party, what are his problems, why you are not paying installment in time, or they can call him to pay the installments in time. They would tell him that it is not proper thing to do. So these kind of things. So clear to you, Kritika? Anuradha, sorry. Is it clear to you, Anuradha? So now, guys, we will do quickly some questions. Yes. Are you ready, guys? Are you able to see? Yes, guys, are you able to see the screen? Is the screen visible to you? On SMA, there is no provision as such, but as I have told you that in all standard accounts at actual level, there is a provision to be made. So SMA are also standard. So a small amount of provisioning which is required to be made is covered there. Okay. A borrower submits statements of following current assets charged to bank. Guys, is the screen clear to you? A borrower submits स्टूडेंट्स फर्स्ट आप या तो फिगर नोट कर लें, थोड़ा सा पेज उस टाइप से है, देन वी विल कम टू ऑप्शंस. Value of stocks is 50 lakhs. The borrower is submitting a statement to bank. Value of stock is 50 lakh and value of debtor is 20 lakhs. So you can note it down. Stock is 50 lakh and debtor is 20 lakhs. The creditors outstanding at the end of the month are 10 lakhs. The cash credit of 50 lakh was sanctioned to borrower against hypothecation of paid stock and debtors. So what margin at the rate of 25% is stipulated in sanction letter? So what would be the DP of borrower? Tell me. What would be the DP of borrower? I would again repeat, the value of debtors, which is value of stock, is 50 lakh. Value of debtor is 20 lakh, which is not visible to you now. Value of stock is 50 lakh. Value of debtor is 20 lakhs. And the creditors outstanding at the end of month is 10 lakh. And the party is having a cash credit limit of 50 lakhs sanctioned against hypothecation of stock and debtors. And margin at the rate of 25% is stipulated in sanction letter. What is the DP of the borrower? What is the drawing power of the borrower? Yes, guys, tell me what is the option? What is the answer? Value of stocks is 50 lakh. Value of debtor is 20 lakhs. Creditors are 10 lakhs. And CC limit is 50 lakhs. 25% margin is stipulated. Yes, only 2 mails have come, Uday Vishwakarma and Muhammad Aslam. What about other guys? Only Uday and Muhammad. Yes, guys, have you left? Have you logged out? Have you found the lecture so boring? that you have logged out? And if you are there, guys, please send your mails. Four or five mails more have come, but not the expected response. So, guys, I day before yesterday, I told this how drawing power is calculated in quite detail. So I think it is better you when this session is complete, you should again try to read from your module. So हमने क्या पढ़ा था guys? क्वेश्चन में क्या दिया हुआ है? वैल्यू ऑफ स्टॉक्स इज 50 lakh. Value of debtor is 20 lakh. Okay. लिमिट उसकी किस बात की है? द कैश क्रेडिट ऑफ 50 lakhs was sanctioned to borrower against hypothecation of paid stock and debtors. So I told you that creditors are also a type of finance. If there are creditors outstanding, it means that person is availing that much credit from the market. And it is clearly stated that creditors, that limit is against paid stock. And even if it is not given, you have to understand that cash credit limit is against paid stock. So this limit is against paid stock and debtors. So how would calculate paid stock? 70 lakh is total stock and less creditors. It means 10 lakh is reduced. So 60 lakh is paid stock. So paid stock plus debtors. 60 lakh is paid stock plus debtors. Okay. And margin of 25% is stipulated in sanction letter. So less margin 25% which the party has to bring. That comes to how much? 15 lakhs. So what is the drawing power? 45 lakhs. So C is the answer. So only I think Uday Vishwakarma. He has answered not only first very quickly, but he has also answered it right. And Pranav Vashishta, he has also answered correctly. And Abdul, how you are writing A? Pritika, 30 lakhs. How you are writing it? And Pritika, again you are writing D. Hope you have understood Pritika now. Yes, you did not reduce creditors. Abdul, now you are saying you did not reduce creditors. Creditors have to be reduced. यही तो मतलब है जब when a borrower submits stock statements, he gives value of stock and he gives value of creditors. So paid stock is arrived after deducting creditors from total value of stock. That comes paid stock plus debtors. Okay. And this is aggregated. Then from that aggregated amount, margin, whatever is stipulated, is reduced. Balance is drawing power. Okay. So now you can see in this question that although what is the significance of drawing power? You can see that sanction limit was 50 lakh. Sanction limit was 50 lakh, but party on the basis of stock statement, his drawing power comes to only 45 lakhs. So he can, on the basis of that stock statement, he can draw from bank maximum of 45 lakhs. So on the basis of stock statement submitted by the borrower, the bank would mark his drawing power of that borrower in the system as 45 lakhs. Although he has got sanction limit of 50 lakhs, but now he can use that funds only to the extent of 45 lakhs. This is the meaning of, this is the significance of drawing power. Okay, if in the same example, say the value of stocks would have been not 50 lakhs, but say 60 lakhs. Okay, and debtor 20 lakhs. Then total 80 lakh less creditor 10 lakh, 70 lakhs minus drawing minus margin say of 1/4, 14 lakhs. Okay, whatever 25%, and this is 20%. So 25% margin has to be reduced, and his limit would be actually more than, but he cannot withdraw more than 50 lakhs, whatever is sanction limit. Okay, now it is clear. You are saying, so this type of example I think is also in your module, and this question is also, this assignment is uploaded, guys. This assignment is uploaded. Next, which of the following is an example of interest earned in profit and loss of a bank? In profit and loss of a bank. Which of the following is an example of interest earned in profit and loss of a bank? कौन सा students we had understood कि profit and loss में income side में दो चीजें आती हैं, interest earned and other income. One thing is interest earned and another is other income. So what in these, out of these four things, what comes under the head interest earned? Yes, Pritika, his study material margin for debtor is 40%. It can be. It is for the bank to decide. Sometimes bank impose a condition of 40% margin on debtor. Sometimes it is general. So there is no hard and fast rule. Yes. Sharan Krishnan, mail has come. Molly Agarwal has also written. Yes. The correct answer is C. Discount on bills. It is in the nature of interest earned, because I told you when the bank discounts a bill, it collects discount or interest upfront in accordance with the period, with the tenor of the bill. कितने दिन बाद पेमेंट आनी है वो उसका इंटरेस्ट पहले ही ले लेता है. तो इट इज इन द डिस्काउंट ऑन बिल्स. अदर लोन processing fees is in the nature of service charge. It comes under head other income. Commission or bills for collection, again other income, because when the bank sends bill for collection, it is not an advance. It is only sending bill for collection on behalf of some party. Locker rent, it is also a service charge. Okay, so very simple question, general question. Yes, Lakshmi, you are saying is there is a chance for eligible amount less than sanction limit? Yes, in the example we have seen that sanction limit was 50 lakhs, but the drawing power turned out to be 45 lakhs. So here the drawing power is less than sanction limit. So the borrower would be able to draw only up to 45 lakhs. Till the time he gives another stock statement. Okay. Which of the following statements is not true? Now tell me. This question is about SMA. We have done just now. Which of the following statements is not true? Yes, guys, quickly, yes. We are running short of time. Which of the following statements is not true? is not true. You have to tell which is not true. 3 are true. Out of these 4, 1 is not true. Yes. Now many of you are writing third में answer C होना चाहिए. So guys, this was I have made this question a tricky one little bit deliberately, intentionally, so that you can put a little bit burden on your mind. So students, what we had discussed? We had discussed that SMA accounts are those which show some stress signals, which are not NPAs, but which may turn into NPAs. These are standard accounts, but showing some stress signal. I had given you an example that I am having a car loan, but I do not pay installment of 1 month. So which of the following statement is not true? Not true. बाकी true है. तो SMA are standard account. This is true. These are standard accounts. These have still not turned into NPA. SMA are accounts showing some stress signals. Yes, true. These are also true. SMA are a type of non-performing assets. Yes, this is false. This is the answer. C is the answer. SMA are a type of non-performing assets. This is the answer. This is false. They are a type of performing assets. So this A and D दोनों का मतलब same है. Okay. So C is the answer. Now many of you, Anuradha, you are writing A. How? Piyush Choroshia, also you are writing A. Again, you have not understood the concept. Muhammad Aslam, you are writing D. This is correct. They are standard accounts. SMA are not a type of NPA. Sharan Krishnan, you have to understand. SMA are not a type of NPA, but they can become NPA in future. They are still not NPA. Okay. Now the balance sheet and profit and loss account of a bank are prepared in accordance with forms prescribed under which law? Which law prescribes forms for preparation of balance sheet and P&L? ऑडिट तो हो गया, लेकिन आपको ये पता होना चाहिए कि किस एक्ट के अकॉर्डिंग, फॉर्मेट किस एक्ट के अकॉर्डिंग है. क्वेश्चन नंबर 4. The balance sheet or profit and loss account of a bank are prepared in accordance with forms prescribed under which law? Yes, question number 4. Yes, Mohammed, Aslam, Dinyash, Piyush, Choroshia, Pritika, Molly, and all others, Nikita Mahajan, Uday, all have written correctly. So this was fairly simple. Banking Regulation Act 1949. So guys, the point is कि चलो आज आपको इतना तो याद हो गया कि बैलेंस शीट और प्रॉफिट एंड लॉस बैंकिंग रेगुलेशन एक्ट 1949 के हिसाब से बनते हैं. So these things I think you will not forget till your exams. There would be no chance if similar question comes that you would mark it wrong. Okay. So this is the benefit of joining live coaching classes. Mitesh Bhai Patel, you are the odd man out. कंपनीज एक्ट कैसे लिख रहे हैं आप? मैंने कितनी बार बोला. Now 5th. Pritika, it is not schedule 3, it is 3rd schedule. Remember correctly. Intent दोनों की same है, but wording change is there. In Companies Act 2013, we say Schedule 3, but in here we say third schedule to the Banking Regulation Act. So a borrower is availing a term loan from branch of a bank. एक term loan है, one borrower is availing a term loan from a bank. The interest in the account is fully serviced. So it means that he is paying interest regular. It is up to date, no problem. However, 4 monthly installments are overdue as on 31st December. Which of the following is correct? Tell me. Which of the following is correct? Account is standard. Account is SMA, account is NPA, account is likely to slip into NPA. Yes, tell me. Only Chaurasia and Uday, you have answered. And Abdul, which of the following is correct? Which of the following is correct, guys? Muhammad Aslam, he has also answered. Now it is clear that 4 monthly installments are overdue. It means overdue period is exceeding 90 days. Okay. So the account is NPA. The account is non-performing. How it is SMA? Molly Agarwal, how it is SMA? 4 monthly installments already due हो चुकी हैं. How it is SMA? SMA तो होगा अगर 90 days से कम होगा. First SMA, then NPA. और NPA में भी पहले substandard, then doubtful and loss. This is laddering. Yes, most of you are writing correctly. C. Anuradha Karmakar and Pranav Vashishta and all others. Mitesh Bhai, Jyoti Jha. So, students, I think that you have been able to absorb. You have been able to absorb the spirit of the chapter. So now, when you will read it from your module, you will have a better perspective. And I think you have also by now understood the approach you have to take while preparing for your auditing exam, which is a very important core area of your study, and not only from study point of view, but also practically. Okay. And we have done chapter 12 and only last chapter is remaining, chapter 13, and after that your syllabus of auditing will come to an end as far as live coaching classes are concerned. So after another 2 or 3 lectures, whatever have been allotted for chapter 13, that is there in the schedule. So guys, I hope that you put all of your efforts, that you put all your energies in your preparation, and do carry out preparation of auditing wholeheartedly. No, not lethargically, wholeheartedly, by taking interest. And you now know the approach, how to tackle the paper, how to remember the things, what to learn, what not to learn, how to write the answers. We have already discussed all these things, and other faculties might have told you all these things. So happy learning. Have a great time, guys. Okay. Thank you very much, guys. Good night to all of you. It's over for me. Good night to all of you guys. Thanks a lot. Thanks a lot. Yes, blessings for your exams. Thank you so much. Blessings to all of you guys from my side. Blessings to all of you. Good night. Session is over.